Good morning, guys. Welcome to this Tuesday, May 13th. Can you believe we're in May already? Halfway through May. We're almost in June. That's going to be half a year, and then it's like 5 months to Christmas. Yeah, it was time flies. I was trying to think about it this morning and getting panicky. Anyway, so starting off the trading day, we are looking at a market holding on to their gains after this big pop we had yesterday. We ran it a little bit lower yesterday, then down to the 58.15 and a little bit below that, back up again. Strong close, kind of a little melt up into the close yesterday. And then we had pretty much been holding in that upper range. So I'll just start off on the long side again this morning, see how far they can take it. Before I get too far into that, I'm going to be looking at the news. So this morning we have CPI coming out at 8:30. That's pretty much it for news. We had the small business optimism index come out at 6. That was better than expected. But CPI is coming out at 8:30, and I think that is the only piece of news today. So we'll see. The numbers are pulled down. So unless there's a big surprise in inflation, I think. To the upside, I think the market holds the gains. If it's better than expected, I think we'll stay range bound, maybe a little bit of pressure to the upside. I think the bigger thing is really going on what's happened over the weekend and the fallout from that. And so far, the reaction in the market has been very positive. We are right up here against this upper area, the congestion area here at the 58. Let me see there. So we started down here at the 5800. So we had this whole area congested 58 to 5900. If we can get up above that, then we're going to be in pretty good shape in terms of moving this higher and getting back up into these upper areas. And look at that. Here is the high, 6150, right? So we are pretty freaking close to get up above this last hurdle, the 5900s. I think we are heading back up to the highs again. So there's plenty of stuff which potentially could derail this, but so far, a trade deal, a couple of more trade deals, and some good investment out of this current trip. It's a 30-day hold in fighting in Ukraine. That would be things we definitely could get this stuff on the right side of it, the market on the right side of this resistance area. In other words, trading higher. So starting off on the long side. Let's see how far they can take it. But at this point, we are kind of up against this area of resistance right now. So we stalled right there, and they kind of had to get up above this area, the 5875 to 5900s. If they get up after that 5900 level, we're going to be in a good spot. So, but this could certainly be an area where they pull back a little bit. So if the resistance holds up here at the 75s, 5875s, we can certainly see this pull back a little bit. And, that would be as the failure to take out resistance. So just the pure technical trade. Yeah, Black Friday, right? And Black Friday before that as well. So don't get me panicky here, Namia. So, starting off with a bias to the upside, let's see if they can take out that 5875 level. If so, I think we're in good shape. When they clear 5900s, we got a confirmation that we are heading higher. So, looking to buy weakness early on, 58.35s, the 25s, 15s, and a new level down here at the 5800s for rotations back up. Looking for short setups against the, I was going to say 58.55, but we just took that out. So 58.65 and 75s for rotations back down. So these two areas, I would be looking for short setups against these areas. We are technically in the move out of the middle to the upside, and we are still extending, but we are right up against the resistance area. So I would not be too shy about looking. This could be, if it's going to stop, this is a good spot to stop in terms of technically. So if this move out of the middle keeps going and they just rip right through this, then stay on the long side of this. So look to buy weakness for rotations back up. So early on, look to buy weakness against the 58 35s, 25s, 15s down to the 5800s. Below 5800s, we take off the long bars and go back range bound, looking for a retracement trade done against these single prints. And you can start looking for that already below the 58.15s, but I would say confirmation below 5800 on that one. And then on the way up, looking for short setups against the 65s and 75s for rotations back down. They clear that 75, just stay on the long side of this and see how far they can take it. All right, so that is the ES, fairly straightforward start. Let's see if this pop to the upside we got yesterday gets continuation and holds on to the gains. Going to be the most interesting part of this whole thing. If this whole thing starts, see if they can hold this line, there's a lot of short interest. We were selling into this rally, thinking it's like a rip roaring, like a bear market pop, and it could. I mean, anything can happen. I'm just not seeing that with all the stuff coming out now in terms of news and positive stuff for the U.S. I just don't see the bears taking charge in this again. So we'll see. At this point, staying on the long side of this, let's see how far they can take it. And what I was going to say is like all these people with short interest, they're going to find themselves on the wrong side of the market. So they're going to have to cover and they're going to have to get long if they want to be a part of the rally. And that's going to just be that the kind of fuel which takes this to the next level. Now, looking at the NASDAQ and the bonds, so the bond market pretty much holding. They're down here at the 13.15s. Not unless they take out that 12.28 to the 113s. We have it 113 a little bit higher here, but once they take out these lower edges, then I start worrying about the short side on the bonds. And they are down here a bit. Let me see if I can find a capital flow on the bonds. They're down here at that. So they have 113. So this is the 4-day edge, 112, 15, 16. So that's the level. So once they start hitting these support areas, they 112, 15, 16. If that comes out, I'm going to start worrying about the short side in a bigger way. At that point, they're heading down into territory where the yields are going to come up towards 5%. But at this point, I mean, they are down here probing the lower edge of the range. Expect failure and rotations back to the 114, 10 to 12. That's kind of the default trade right now. We're bouncing up against 1308. I have nothing in between. There could be an edge here at the 113s. Yes, for some reason I don't have anything down here. I have nothing to lean against either. So the only reason to do anything there is that the 113 is usually a pretty even number for market to have to resist against. So and to find support against is what I meant. So during the buy weakness, 113.08 for rotations back up. Below that one, I would stay on the short side just to see if they can run it down into these lower levels. But I would just primarily be range bound on the bonds. Just a slight bias to the downside to see if they can creep down towards these lower edges. That's the way I would look at it right now. And any of these levels, 1308, the 113s, the 112.28 could potentially hold. So that's why we have it. Now, looking at the NASDAQ, that's the one which has the biggest potential right now. They got super hammered on the way down, and they are going to be poised to pop on the way up. And you can see they have already taken out this area of congestion. So they're already in this bigger area. There's a pretty big area of congestion on the NASDAQ here. And if I fold this stuff together, this was on the way down, as this was on the way up. So you can see here we have pretty good support going back and forth there. So this whole area comes to, if we can clear that area, we are pretty much on our way. Then we'll find ourselves running up to this attractor, 21.2, and they've cleared that one. We are on our way here, right up here into this upper area. And look at this. We are going to be up in all-time highs in no time. 22,000 and change. We're 1,000 points away from that. That can happen pretty quick. So NASDAQ and the rip-roaring rally to the upside. And I don't think there's anything stopping it at this point. And there could be some geopolitical event. Obviously, could be stuff like that happening. But at this point, market is definitely leaning towards the long side. So looking to buy weakness on the NASDAQ at this point against the 20,885. The 20,820. 750s down to the 690s to 700s for rotations back up. So looking to buy against the 880s, 820s, 750s down to the 700s for rotations back up. And on the way up, not going to be super aggressive on the shorts here. There could be some resistance up here going into that tractor at the 21,200s. We're a bit away from that one still. So in any of these resistance areas could technically hold. I would just not be super aggressive on them. I would just wait for the market to show me an edge and then maybe take quick scalps against it if it sets up. But technically, I would prefer the long side of the market. Sometimes you get nice setups. I mean, once you have the day session range set, then you can look for intraday kind of shorts for scalps. But if you want to get in on a bigger trade, you want to stay on the long side of this and look to buy a weakness for rotations back up. And then finally, oil and gold. Gold pulling back a bit. So they were up here, reverse retesting that 32.50, 52 in the yesterday session, could not do anything. The overnight though popped pretty hard and then took that out. The reverse retesting 32.70s, making a good case for them to trade higher. But now right at the open, they held this in the old overnight session, and then in the open now they finally busted through 32.50s again and are heading back down again. So interesting, right? Like almost got me on the long side this morning, but I started taking this out. So I'm back range bound, still thinking we may see retest of these lows. So as the people rotate out of gold into equities, that's most likely what's happening here. So I would be looking for downward pressure. So I would be looking to get short against the 32.50, 52 again, maybe up to the 64. But if they trade up above 50, 52, I would take off this short bias and go back range bound, maybe even look for moves to the upside. So not going to be super aggressive on the short side above that 52 level. And that's just because the gold has all sorts of other dynamics in it. And sometimes you see the trade, it's kind of not what you would expect. But at this point, if the theory that they're rotating out of gold into equities, yeah, well, then it makes total sense. So we are right at this attractor right now, 32.40s. So range bound around this attractor, but I would be looking for pressure to test these lows at 3200s and see if they can take that out. And if that happens, look out below. Then you want to be on the short side. So if the equities keeps going, I think you're going to see more pressure on gold, at least in the short term. So there you have it. On gold, so look to sell strength. Rotations up to at this point against 32.52. Against the 45s, you're right there now. So this would be a reverse retest of the mean, really, if that short sets up. But then, of course, buying opportunities against these lower areas, 32.30s, 24s, down to the 20s for rotations back up. And that would be just pure technical trading that you're looking at. If they trade in this range on gold, in other words, they traded around this high volume area, buying these lower support areas would make perfect sense for rotation back to that spot. So it could go either way. At this point, I'm looking for a retest of this low, maybe lower. But if support holds, we'll see a rotation back up to that 32.40s. So, and that's kind of our default trade, by the way. So we're looking for that failure to take out the lows. And then finally, oil. With all the stuff going on in China back in the mix, the demand for oil back on the table. So oil prices in the short term, at least on the upside, the pressure is to the upside. Until more supply comes online and more stuff happens, then you'll see this price come right back down again. So we'll see where they settle in, but they're getting close to that 50 level. And I think below 50, you'll probably find some good support on oil in terms of the trade-off between producing more oil and the cost of actually producing the oil. So I think that they can make money at between 40 and 50 just fine, and about 50, 60 I think is the sweet spot. But it's we'll see how far it actually goes. Short-term pressure to the upside on oil, so look to buy weakness at this point against 62.50s, 62 down to the 61.60s. Rotations back up, and they trade below this one, the 61.60 to 70s here, this support area. Then take off the long bias and go back range bound. at that point, we're back at that low attractor area. But right now, we're heading up to test these upper areas of resistance. And I would say if they start taking out that big ledge right there at 64, the trade above 64, I would start worrying about the long side and then trading it even higher. So short-term pressure to the upside on oil. Not going to be super aggressive on the short side just yet, but overall, in the bigger picture, I'm still biased to the downside on oil. So as they get to resistance areas, I would for sure be looking for short setups. But when you have short-term pressures like this, there's no rush to get in on the short side at this point. All right, so that's oil. Stay on the long side, right, to get started, at least for now, and stay on the short side on gold, at least to get started in the day session, see if they how far they can take it. All right, back to the ES, and we are still holding on, trading out towards the highs. So CPI coming out in about 8 minutes. So time to go grab a coffee and get ready. So good luck if you're going to trade the CPI. See how crazy it's going to get. It could, I mean, I'm not necessarily thinking it could be a crazy reaction, but you never know with that number. So good trading, guys. And we'll see you back at the 11:30 for the next update. All right, guys, later.